Hello, scholars. Let's talk about chapter 1 and the key things I want you to get out of this chapter. It's a good overall view of what the heck operations management is and what it's all about. It goes through the 10 OM decisions. I'm not going to repeat those, but you can certainly read them in about 100 places in the book. It starts off with the definition of operations management. Like most things, when I teach, I don't insist that you memorize things word for word, but you should know the concepts. So if you're at a party this coming weekend and somebody says, hey, what's operations management all about? You're going to tell that person that it's essentially about the activities that an organization or a person goes through to create value in a product or service by transforming inputs into outputs. That's basically what it's all about. You're just basically taking something and you're making it better and you're adding value as you're doing it. That's what an operations manager does. There's 3 parts to every organization that we talked about. There's the finance end or the administrative function. There's the sales and admin function, and then operations. Which one's the most important? I don't know. I think operations is pretty darn important. You can't do anything unless you've got a good product out there in the market, product or service. So, you need to know that. We talked a little bit about a couple of key statements that I want you to know. Everybody needs to know what an income statement is. Everybody needs to know what a balance sheet is. Income statement, in its simplest form, has revenue at the top. You subtract from that cost of goods sold, which are the variable costs associated with your production. If you're McDonald's and you're making hamburgers, your variable costs are going to include your hamburger and your buns and the food product that goes into making the product that eventually goes to the customers. May or may not include labor. I would think it would, but a lot of organizations don't include labor as a variable cost in doing business. You subtract cost of goods sold from your revenue and you get gross margin. From your gross margin, you subtract your operating expenses. So again, the McDonald's analogy, that's going to be your rent, your manager's salary, overhead associated with corporate marketing expense, things of that nature. And from that, you get an operating margin and earnings before interest, taxes, depreciation, and amortization. That's called EBITDA. So there's a basic income statement, a basic balance sheet. A balance sheet is comprised of 3 components. 3 of them are assets, liabilities, and equity. The accounting equation is essentially assets equal equity plus liability, or liabilities plus equity. You can flip that around any way you want. Equity equals assets minus liabilities. On the balance sheet, assets and liabilities are always noted in terms of their liquidity. So at the very top of your balance sheet would be your cash. That's a current asset, and it's the most liquid. Current assets will include accounts receivable, inventory, things that are readily convertible to cash. Liabilities, same way. Your current liabilities show up at the top. Accounts payable. Going down to your longer term liabilities, such as a mortgage. Again, assets are things that we own. Liabilities are things that we owe. The difference between assets and liabilities is our equity, or how much is left after we paid off all of our creditors. That's not 100% clean, but it's close enough. So those 2 statements are important. You should know them. We talked a little bit about a statement of cash flow. I'm not going to go through it here. We talked about Henry Ford, one of my favorite operations management quotes. Henry Ford said, if you ask your customers what they want, they're going to tell me, if I ask my customers what they want, they're going to tell me a faster horse. And we can't just be making faster horses. We got to be thinking above and beyond. People say, if you ask your customer what they want, they'll tell you. I don't think they always know. So as operations managers and product developers, we need to be working a few steps down the road, down the chessboard, moves down the chessboard to make the right decisions, to put the right products in the market when the time is right to put them in there. Talked about productivity, and what is productivity? It's an important ratio that every operations manager needs to know, and it's the ratio of outputs, how much is being produced, divided by the inputs, how much goes into producing those inputs. Gave a number of examples on that. You need to be aware of that. We talked about a mission statement, and what is a mission statement? We're going to take a look at what the components of a mission statement were. Essentially, what I like to say with a mission statement is it needs to do 2 things for your employee base. It needs to inspire and it needs to enroll. If it's not doing those things, if it doesn't inspire people to think, okay, this is a cool place to be, I want to be here, I want to work here, it's not doing its job. If they can't remember it, it doesn't do anybody any good. And it needs to enroll. It needs to get people so that they say, yeah, I want to make this better. I think I can help do this. I can help make this happen. So critical things associated with the mission statement, honestly, that may have come in chapter 2. And that's about it for chapter 1.